People quite often ask me, why NIW, why this firm versus all the other firms? And the reality is all the firms in the market of premium finance all say they do good stuff, they all say they do great designs, they all say they have best of breed, they're market leading. And what I hear when I have that repeated back to me now is blah, blah, blah. But let me tell you why we got into this space, because we never intended to be a premium finance specialist operation. And what we found when we had our own clients back 20 years ago was that what was being marketed and what was actually being delivered and happening were mismatched. And you only have to do a Google on premium finance to hear the stories that say what I was sold and what actually happened never married up. Now, is that because premium finance is a bad idea? Or is it because it's a great idea that's just not been tuned and optimized to achieve the outcome that was promised? So we started looking around for some group that had looked at the underlying engineering that makes these things work. Because anybody can draw a car, but making a car that actually works, that's a whole different ball of wax. Premium finance, like a lot of these concepts, is very simple on the surface. You borrow some money, it finances your life insurance, the life insurance or the cash value in the life insurance pays off the loan at some point, and it's all easy, isn't it? But the reality is that there's a lot more to it than that. And so we built this firm on looking at the underlying economics and the economic reality, not the illustration, but the underlying economics that drives the insurance product. Why does it do what we say it does, and when does it not do what we say it does? Under what conditions will the risks create failure? And what was weird about that particular journey is when we started asking life carriers and banks that had been in this marketplace for a long period of time, they all said they had never been asked these questions. And if you think about that, that means there's a whole bunch of people driving those cars, selling those cars, that have never asked the question of, does it actually do what we say it's going to do? Do the brakes actually work when you want them to? And I don't know anybody who would get into a car that didn't know or feel those bases were covered. And yet we're asking some of the most important clients we ever have to do this transaction. So when we started looking at it, the first thing we noticed is that designs were not tuned about long-term success. They look good on paper, but when you actually started to dig underneath, the necessary design and sacrifices that need to be done within the design. We don't use term blend, for example, because we don't like being paid. We use it because it actually helps increase the probability of success. And we started to ask questions like, how much term blend increases the probability of success by how much? And the first question we got is, what are you even talking about? So we started getting the actuaries at the carriers to start measuring probability of success and how important cost loads and all that stuff that nobody's interested in to actually get the answers to those questions. And when we had the answers to those questions, optimize our designs around minimizing the risk of failure. So you can sell something that looks good, or you can sell something that actually stands the test of time in a way that no other product on the market is currently designed to do. And for the most important and wealthy clients that you have, our position is the latter is way more important than anything else. The other thing we found that was weird about it is, just like with a car, if you went into a car showroom and bought a wonderful looking car that was just everything you wanted, and they said, well, there's absolutely no servicing plan in place whatsoever, you wouldn't even bother buying it. And yet if you think about it, in premium finance, we're making some assumptions on life insurance performance called an illustration. We're making some assumptions on a loan called an interest rate forecast. And we're hoping that they stay true. And never in history has that ever happened. So somebody has to be looking at it, watching it, to make sure that it's actually staying within the success parameters you need for this thing to work. Now, you can spend your time selling, or you can spend your time doing all the microanalysis and financial analysis and monitoring required to do that. Or you could use NIW because we're the only firm in the market that has 12 full-time people doing nothing but that. And if you do it every day, you get pretty damn good at it. The final thing is, everybody thinks of premium finance as a solution to estate planning. You're creating an asset that can be triggered in 3 situations. In estate planning, it's obvious if there's a death. Well, that's great in that scenario, but what about the situations like in business planning, where you're doing key man, buy, sell, succession planning, all those sorts of things, where people die before retirement only 20% of the time? What are you going to do to fix the 80% of the time where somebody hasn't died? How about we use the cash and the creation of cash inside the product to do that? Well, that takes a very narrow bit of engineering to make that work. There is not so much fat in these products that you can borrow money and automatically have a guaranteed surplus at the end of the journey. That has to be very carefully designed and monitored. But once you start doing that, you can start to have incredibly innovative ways to fund living buy-sells, living buyouts, living succession plan, where nobody has to die to enjoy that particular benefit. And the final thing, the final triggering point, is creating an asset through a long-term care issue like a chronic illness, a critical injury, or a terminal illness where somebody's had something catastrophic happen but it hasn't killed them. Now, this is not something that our ultra wealthy worry about so much, but it's absolutely something that the highly compensated for our Kai-Zen and Kai-Zen plans worry about all the time. Because you know there is a 1 in 5 chance that you won't get to retirement before something bad happens to you. And most of us have not saved enough money to protect our family and even look after ourselves should that happen before we retire. Imagine, I used to write off terminal illness right up until my partner pointed out to me, imagine you're that person who has that weird illness there is no cure for, and your health plan doesn't cover that experimental treatment that nobody else will talk about, but that terminal illness payment absolutely will. Would you use it if that happened? Having a contingency plan that covers that base. So what can we start to do here? We can start to create an asset using leverage, just like the wealthy do, to fund all sorts of things. ESOP buyback obligations, saving the company money to fund deferred compensation plans, having family trusts create cash coming back each generation to that trust while they're still alive so the trust doesn't get depleted. There's all sorts of really interesting things you can do that just aren't under the normal banner of premium finance. But to make that happen, you need innovation that starts with an understanding of the need and the problem, and repurposing the whole design and the whole approach and the whole servicing plan around achieving that objective. Now, last time I checked, there is no other group in the country that does that as well as NIW. And that's why I think you should consider us.